G'day guys, Ben and Simon here. Welcome to another episode of the Pumped on Property Show. Now, I am freezing
Cold this morning, hey.
but I'm also super excited about today's podcast because we're really speaking to those of you out there who are in your 20s or parents of 20-year-olds that are, wanting to give some advice to your kids. Now, this podcast is going to be a little bit different than the normal because we're going to be talking about some of the fundamentals for people in their 20s. But realistically, I think the thing that I'm most excited about with this one is if you're just getting started in your 20s, then you should be actually financially free in your late 30s, early 40s, and that will completely change the course of your life and everybody around you because you'll be able to make choices that other people can't so much sooner and get to live your passion and actually help the world in a positive way sooner. So
it's pretty insane, getting started at an earlier age and the opportunity it's going to give you, not too far down the line. Like 40, when I'm in my early 20s, there was no way that I thought I was going to be financially free by my 40s, but
I knew
now
you were going to be.
Well, now it's going to be a reality for sure, but it's an amazing thing to be able to kind of have those choices at such an early age. Like I've got a couple of friends' parents, not so like personal friends' parents, but like in particular, one of my best mates' partner's dad, he's been investing his whole life. He lives in Sydney now in like a massive house right by the Sydney Harbour, like amazing joint because he just started at a younger age and now he doesn't work. He's just a full-time investor. Wow. And he just tries to give back and help other people. And it's literally like you ask him, it's like, what was it from? He's like, getting started at an early age.
Just getting started at an early age. Like one of our clients, George, down in Melbourne, started, I think he bought his first property with his dad when he was 18 or 19.
Yeah.
He's now in his 40s and he is completely financially free through property. He also started just in index funds early as well in the stock market, is also financially free through the stock market. He also has a job too. Like he's got super as well. It's incredible to see so many people that have done this. And sometimes it's hard to find those people, but they are everywhere when you start turning over rocks and seeing them. So the first thing that I wanted to sort of talk to is when I was in my 20s, I almost had this like angst to just achieve everything really fast, like on hyperspeed. I don't know why.
It's like everybody does in their early 20s, right? I was listening to a podcast. It's because your prefrontal cortex isn't fully developed yet. And that's the thing that kind of stops you from, being super creative and adventurous and ambitious and things like that.
Yeah.
So in your early 20s, without that being fully developed yet, it's just like, it's go time because you're kind of mature. You kind of feel as though you're an adult yet, but you're just not fully developed.
Wow, that's interesting.
Yeah. There's actually science behind it, which is fascinating. But
I don't think mine fully developed until like last year. I'm like 35.
Still going for me, for sure.
I hope it never fully develops. I want to remain like a bit kid-like for the rest of my life.
Oh, hell yeah.
But, like jokes aside, I think the angst that I felt is that I wanted to be financially free by 30, but in my early 20s, I didn't have a plan. I didn't have the skills. I wasn't valuable enough to the market at that time to understand how to make the money to fast track it. And I didn't really know what the hell I was doing. And so the first thing I wanted to say is there's only two things that you really need to do in your 20s. The first thing is learning. That's through podcasts like this, through videos like our channel or Instagram pages like ours, but it's through doing the work, like the reps, reading the books, listening to those podcasts, watching the videos, like talking to incredible people, going and finding those people in your environment, family, friends of friends, colleagues, whoever's doing well, and buying them lunches or buying them coffees or taking them for a walk and a juice until you start to figure out the pattern of success. Because I sent you a little thing this morning, actually.
The Jim Rohn one.
Yeah, one of my mates in Sydney sent me this when we were just like 22, 23. We were really starting to listen to his stuff. And something that I saw this morning reminded me, which is like there is a process to success. Like success just doesn't happen. Success is a whole bunch of things, but one of those big things is consistently learning and growing. So your job in your 20s is to learn. And the job of the learning is to figure out one strategy that you can focus on through your 20s and 30s, which is going to make you a millionaire or financially free. And that is as simple as it has to be. Your job is to be the kid in the candy store at the first, to figure out which strategy, whether it's business, a job on the side, your job, or it's an investment class like crypto or property or shares. But the only people that I know that are successful in their 30s are people that in their 20s found one thing and then repetitively started to do it.
I think that's the most important thing there as well, like learning. And while you're learning, before you're ready to take action, looking at all of these different avenues and figuring out where your values align, where your passions align. And, the funny thing is in your 20s, you kind of don't ever want to ask anybody else about their financial position or where they're at. But most people that are relatively successful and might be a little bit older are more than happy to share that information, especially if it's in a one-on-one safe environment, maybe person to face to face, not necessarily over the phone or something, because people want other people to be successful, especially once you're successful. You want other people to be on the top with you. So they're going to be willing to give back. So I think having that confidence, going out there and asking the questions and, phrasing it in the right way, just saying, hey, I'm just starting to learn about trading shares, or I'm thinking about starting my own business, or I'm thinking about getting into property investing, and finding people in your life that you trust, that you can just sit down with, have a cup of coffee and have a bit of a meaningful conversation to build. And the reason that you talk to a lot of different people and you read a lot of different books and listen to a bunch of different podcasts is to, before you're ready to take action, actually figure out a lane. Because what we were talking about off camera is so many young people try and do it all. I can't even tell you how many of my friends have got a couple of $1,000s in crypto, a couple of $1,000s in the share market, are dabbling in bits and pieces here and there, but they haven't found their niche. They haven't found their lane yet. And I think you look at any of the successful guys, like, if you look at a sports person or you look at a very successful property investor or a very successful business person, they put their blinders on in their late 20s as they were getting started and just focused on the one thing, became a complete expert in that one thing. And then once you've mastered something, then you have the freedom and the capacity to start looking at alternative options.
I love that, man. Like, I had a friend at school named Scott, and he was playing rep basketball, rep soccer. He was playing rep tennis. He was also playing for Australia at squash at that time.
He's the most athletic dude that you've ever
met.
I
know. Like, he was the funnest dude to grow up with ever. Because, like, I was always trying to compete with him. Always getting smashed. But he was also, like, he would run for state. He would sprint for state. He would also make state for swimming.
Yeah.
And the thing about professional athletes and why this is important is he was forced as a 14-year-old to stop doing everything but squash. And he went on and played squash for Australia, went to the Olympics, became one of the top players globally for 10, 15 years. Now, most people aren't that good at sport where they're forced to make that decision. When you read Mick Fanning's book, he was playing rep soccer and was going to be on the fast track to playing soccer for Australia.
Yeah.
And at 14 or 13, he had to make the decision, was it soccer or surfing?
Yeah.
And he chose surfing. Now, this is important because those guys get there early, but most of us don't start to get good and start to go, okay, I want to be above average. Like everyone listening to this podcast now wants an above average life.
Of course.
Where you're earning more money with more passive freedom and more choices sooner. Now, you're almost in a way like a professional athlete in that sense that at some point, when you learn enough or enough to know that you know better, you have to niche. And for me, in my early 20s, I niched into property.
Yeah.
Now, I've done absolutely nothing else but property for 11 years now. And because of that, the results are starting to compound. It's exactly the same as Simon. Like, he has niched into property 4 years ago. And because of that, he has fast-tracked himself. Now, that's the second thing I wanted to talk about. So learning's the most important thing first. The second thing is building the foundation. Now, if you're starting in your early 20s, by the end of your 20s, you should have bought at least one, if not up to 4 properties
Mm.
like Simon has, or like I had, and those 4 properties or one property is the foundation that's going to make you financially free in the future. Now, if you're starting and you're strategic in your 20s, you can do all of your accumulation phase and just enjoy the hell out of your 30s. Like
Exactly.
Simon doesn't have to stress now because he's done.
And that was the intention. That was the plan as well, to get started early, set up the portfolio early so that I've got that freedom a little bit earlier, because, you know, I've just seen what happens to people once they have kids, and their perspectives, their priorities change, their life changes immediately in a positive way, like in a really positive way. But
also there's less money at the end of the month too, because you lose income, you also have dependents, the bank stops seeing you the same way.
So I was down in Sydney over the weekend catching up with my mates, and, you know, 2 of my best friends have just had babies, which is amazing. But at the same time, you know, they've got time pressure, and I can hear it in the conversations that we're having now. It's like they're fearful of missing out because they're so focused on like providing for their child now, which is amazing and obviously what every parent should do. But being able to set that up before the kids come, imagine. So like by the time I have kids with Tay, you know, we're hoping to have replaced 40, you know, 30 to probably $50,000 worth of income, which, you know, that's a good part-time income, right?
That's incredible.
And it
how much pressure does that take off?
It takes so much pressure off. It means Tay can take a year off, she can take 2 years off, she can be around in those like fundamental years that are really important, and we don't have to stress as much about money. So it's like just getting ahead of the curve a little bit.
I love it. Like, I actually love it, man. And like the stuff that you've done is so inspiring, because at the same age, like I'd already had a kid, and I'd bought properties but with no strategy. And so, you know, you saw that where I went, fuck, I've got the wrong stuff. I sold 7 out of the 9 properties that I owned by the age of 31.
It's an ego death,
completely rebuilt. I'm so glad it happened.
Yeah, of course.
I couldn't give a shit now. Like when people say I've got the wrong property and they don't do anything about it for 10 years, I'm like, you've just legitimately cost yourself 10 years.
Yeah.
Or I just ripped those Band-Aids off and then went and rebought the right stuff.
Yeah.
But you've built a foundation off that. So that probably leads us into the second thing we wanted to discuss, and that is there are certain fundamentals, if you choose property as your niche, that following in your 20s will guarantee you success in your late 30s and 40s. Now, I was so interested in challenging myself in my 20s and early 30s that I looked for the challenge in my property portfolio. I've bought houses, now I'm going to renovate them. Yeah. I've renovated houses, now I'm going to build them. Yeah. I've built normal houses, now I'm going to build dual locks. I've built dual locks, now I'm going to subdivide. I've done subdivisions, now I'm going to go Airbnb. And it's just like, it was such a waste of time.
You're a little ball in a pinball machine just bouncing all over the joint.
All of these things take mental energy, and they all take skill. And each of those things is a skill in itself. If I had have known in my 20s that there are fundamentals like buying metro, buying big blocks of land, buying great suburbs closer to the city or the beach with good infrastructure and good average household incomes, and that's all I needed to do. If I bought them at the right time, I could just ride the wave. Far out. Like, how much less pressure is that than trying to figure out all of these skills just because I was bored in my job and looking for a challenge in my investments? Like, be challenged in your job and invest safely and confidently using fundamentals.
Or try like a side hustle or something like that, maybe. You know, there's so many cool little online business opportunities now. But I think what you're going to realize when you start learning is that everything's worked, and there is so many strategies, there's so many different ways to do it. Just recognize that you're going to read books, you're going to listen to podcasts, you're going to hear people talk, and, you know, somebody may have become financially free through investing in units. Someone may have done it through developing. Somebody may have done it through flipping. Somebody may have done it through subdivisions.
Every way that you could, people are financially free through that niche.
Commercial, retail, everything. So understand that's a reality. What Ben and I are saying is, you know, understand that that's a reality, and then pick your niche to just solely focus on that so that you can become an expert, so that you can become a specialist, so that it's going to fast track and compound a hell of a lot easier, a hell of a lot better. Because when you're trying to learn everything, it's really hard to just get focused on one thing. You know, it's the same as your mate. You know, he had all of these options. If he had have gone and played golf, if he had have gone and done tennis, if he had have gone into athletics, like he would have probably made it in any of them, but he had to pick his lane to excel to another level.
I bet he wishes he chose tennis or golf because I know he's playing on zero in golf now, but he's like, yeah, probably that would be the right path. Jokes aside though, like when we talk about these fundamentals, something that Simon said when we were talking about what we wanted to discuss today off camera was, if you start in your 20s, and I hadn't thought about this till you brought it up, you have 2 cycles. Now, we've talked about cycles before. These are these 7 to 10 or 18 to 20 year cycles that come through. Now, you know, everybody's familiar with the GFC.
Yeah.
In the sense that that was the last time we had a really bad economic downturn. That was a top of cycle event or an end of an 18 to 20 year event. And then what we've just gone through, which the coronavirus in the last year, is what they call the mid-cycle, or that 7 to 10 year event in the middle. Now, why this is important to understand is that if you get started in your 20s, you've got one full cycle and you're only 35.
Yep.
And then you've got another full cycle and you're only 50 to 55. And it's like the fact that you'll have 4 opportunities where there will be times when everything goes on sale.
Yeah.
You can pick up assets at ridiculous prices. Yep. And the fact that you've got 2 full cycles where every cycle things almost double in value, if not triple. It is just insane how wealthy and how many choices you can have because of the financial freedom you'll be able to slowly build over time.
Yeah, and Buffett talks about it. I've said it so many times in this podcast. You know, it's not about timing the market, it's about time in the market. So the earlier that you can be exposed to that compound growth, that compound interest, the better. And I would highly recommend going and playing with some compound growth calculators online, because it just it gets you excited. I'm not gonna lie, like it really does. You know, if you're buying your first property at 22 with the intention to hold it for the rest of your life, you can put a 40-year compound growth at the average rate of whatever market you're buying in. Let's call it 5.
Sorry.
Bless you, I guess.
That's not getting taken out, is it?
No. At least it's a sneeze, no COVID. But you can, you know, put that 5% in and see what your $500,000 is going to look like in 40 years' time with a 5% compound growth calculation. It's insane. Like, I think it was Buffett as well that calls compound growth the 6th wonder of the world. It's just amazing.
It is amazing. And, you know, I do play with those things regularly. And, you know, like a $5 million property portfolio in 50 years might mean that your net wealth is worth $20 million. Like, it's insane how far things can go if you've got time and the patience to hold them and just let them do what they need to do. So,
so kind of going on to the next thing, I think keeping it simple and not overcomplicating things is really important. So, you know, you've learned it at the beginning, then you've kind of funneled it down to your niche, and then you really want to specialize in that niche, and then just keep it simple. You know, everybody wants diversification, but in my opinion and in my portfolio, it's like, it's not about diversification, it's about the end goal. It's like, what is more important to you? Is it having a house and a unit, or is it having $150,000 worth of passive income?
100%. Like, it's so funny. Like, clients often say to me, Ben, like, I don't want to have 2 or 3 properties in the one place in Brisbane when we're buying for them. And I'm like, if you knew what you knew now 10 years ago, would you have chosen to buy 2 houses in Geelong on the beach, or 2 houses in St Kilda, or 2 houses in Cronulla Beach, versus buying 1 in St Kilda and 1 in West Melbourne, or 1 in Cronulla Beach and 1 in West Sydney? It's like, diversification is for people that don't know what they're doing. People that know what they're doing are so strategic and going straight for the jugular and the thing that works. And I think that's so important to understand. Like, diversification is a crock of shit, and it's just a thing that people that don't understand something really well do to manage their risk, because they're not focused enough and educated enough on one area. Now, I fully believe that it's nice to have a job, some super, some shares if you can get some, property, maybe some crypto. Like I fully believe in diversification across assets. And
Not while you're building your foundations though. Like that's
not
I
at
think
the foundation.
that's what
Yeah.
we're getting at. Like if you're getting started in your 20s, you've got a whole lifetime ahead of you to invest, and you've got a whole lifetime ahead of you to diversify. But in the beginning, just keep it simple, keep it niche, focus on the fundamentals
Yeah.
to build that foundation, because off that foundation, then you can leverage into other things.
Yeah. Now, again, I'm just going to really go to these basics. Metro houses, big land, best pocket in the city that you can afford, best suburb, best street, best average household income, lowest vacancy rates, lowest percentages of renters, the right property with upside potential. Like I know I went through that quick, but it doesn't have to be more complicated than that.
Doesn't.
And if you like cash flow, choose something with more cash flow. If you like growth, choose something with a little bit more growth potential. Start with what you can afford. Like when I started to buy, my first property was 350K, I think.
Yeah, same. Well, a bit more.
Yeah, I wish mine was yours. Like,
hey, if you had held on to it,
it
it's
actually
done well.
would be worth 700 or 800K now.
More.
My second property was 213. My third property was 310. My fourth was like 350. Like, start where you are. You don't just arrive at $1 million assets on Bondi Beach. Like it takes time to get to that point if you want that. I'm personally not that interested in that. Like I would prefer a spread of like lower value but high quality assets versus like putting the eggs in a basket. But then again, that's my niche. Like I'm not going for full blown blue chip $3 million assets.
Yeah. And then your mindset is really important as well. A lot of young people, and you can talk to this big time, just focus on short-term cash. They just want to get that short-term boost. That's why crypto is so popular for younger people at the moment, because they can make that short-term cash. Everyone's trying to get rich quick, but nobody understands that you've got a whole life ahead of you. You've got so much time. So you really need to change that perspective, change your mindset to a longer-term vision so that you can avoid making mistakes and focus on the right assets, because it's risky, especially in property, to start looking for short-term gains. Like if you're trying to turn a short-term profit, that's where you might come unstuck. That's where you may make a mistake, and you might have to restart in your 30s from the mistakes that you made in your 20s, where if you've got a long-term vision and you are like, okay, well, I remember talking to my auntie or uncle and they said, oh, I wish I bought this house because today it would be worth this much. Or you talk to, anybody in your life that's talking about the regrets that they have selling properties or not buying properties. It's like, use that as hindsight. And in the beginning, when you're building those foundations, focus on set the intention that you will never sell that property. It's as simple as that.
It's that easy. Like buy something that is so good that you want your grandchildren to inherit it.
Yes.
I am so glad that you brought that up, man, because I forgot about it. So I used to measure success on the properties that I bought by how much below market value I bought them at the time. So my second property at 213K, I thought I was like a baller because I thought it was worth 240K at the time. Now, had I have spent 300 grand on a better suburb, a better street, a better property, over that 6 years that I held it, I think it went from 213K. I think we sold it for 560 or something. If I had have bought the 300K suburb, I would have sold it for almost 900K. Like that difference, and that's a short-term decision. Like if I knew then what I knew now, I would invest in one high-quality asset over 3 cheaper ones. I would invest in the sort of thing that has the potential, as Simon said, to keep working for the next 15 to 30 years, not just the next 5. And it's how you measure success. Like we're in such a stage of life where there's just the gratification of the cryptos and stuff. But it's like the growth will come if you invest in the right asset at the right time. And the averages over the long term is what's most important, not the very, very quick short-term upside.
Yeah, like you look at history is your number one indicator for that. And it's like Sydney, Melbourne and Brisbane have all increased by over 9.5% per annum over the last 50 years.
Insane.
Like that's massive. That's big numbers. It's like have a bit more of a longer term outlook and just focus on the basics. So that's a really important one. But let's I guess talk about some of the mistakes that we've made and that, a lot of younger people do make.
you know, these are just some of the things that we jotted down that I don't know if I would have heard in my 20s without experience, but a lot of people aren't like me. So it's like you can learn from other people's stuff. I was learning, but with property, there just wasn't this good stuff out there.
No,
at
not in
that
the
time.
not in the like, you know, what was it, 2008, 2010 that you bought your first one?
I think I bought 2011.
11.
I bought my first two. But, you know, mistakes that I've made is trying everything, which I think we've already touched on. You know, buying what I knew. So if I look at it, everything that I bought up until my sixth property was like super close to home. And then on my sixth property, I like listened to somebody who I respected at the time, and he said that there was some short-term money, and without doing any of my research, I just went to try and make that short-term money like you sometimes do in your 20s, and I ended up losing $40,000.
Which in your 20s feels like
oh
$1
man, it
million.
was huge. And it was not just my money, it was a friend of mine's money. We lost 40 grand together. It was supposed to be 20K each, but I just paid him the 20,000 bucks so that he didn't lose his side of his money. Like, I felt really disappointed, but losing money then enabled me to like start making much better decisions after that.
Now, I'm going to pry a little bit there because this is one of the mistakes that a lot of people make. What type of asset was it?
Yeah, it was a regional property.
House and land package?
House and land package in a town where only 6% of the people living there could have afforded to pay for the property that we built.
So you got like spooked too, you would say, almost.
Completely. Like the guy that said that he was doing one, and I don't know if he ever did or not, was a builder, and he just wanted the building job from me. Now, I was just like, yes, I might be able to make 100K. It was only by the time that construction started and I went back and looked at it that I had realized what I'd done.
Yeah.
That it was way too late.
It's a brutal world out there, and there is, you know, lots of sharks that do not give a fuck about you. Like, there is a lot of people
100%.
that just do not care about you at all. All they're trying to do is line their own pockets. So, you know, be cautious with the decisions that you make, and, you know, take everything that you hear with a grain of salt. Like, I don't mean to sound distrustworthy or anything like that, but your first decision is the most important decision. And, you know, if that was the first one, and I can't tell you how many first timers I've talked to that have bought an off the plan unit or a house and land package where upon settlement it was worth, you know, $20,000 to $100,000 less than what they actually paid for it, and it just takes you a hell of a lot longer to take that next step if you've set up the foundations like that. And I'm not saying that it's the worst asset out there, and I know it's worked for some people in the past. It's just be like, you know, err on the side of caution there.
100%. Like, we talk to people every day that bought houses at the top of the last Brisbane or Perth cycle that are still worth $100,000 less than they paid for them 12 years ago. Like, I see people buying units in Sydney and Melbourne in the last 5 years that are worth $100K less than they paid for them, where the rent returns $200 a week less. Like, be very, very careful. And I think that sort of leads on to another mistake that I made, which was just I sold properties early.
Sure.
Because I was impatient and I thought change was progress.
Yeah.
But change is just change. Like, if you're changing and you're going sideways, what is the point of changing? Like, I thought if I sold this one property and made 100K and then I went and bought 2 new properties, I would be better off. When in fact, if I had have just bought the right one asset and kept it long term, I'd be exponentially better off. And I didn't realize this until I was about 31. I went to this like 20-day seminar that year where all these spruikers were, and they were all on stage with their incredible ideas and all of the things. And then this guy got up and he talked about the 3 or 4 deals that he'd done in Sydney over the past 10 years and how he'd been able to make about 500 grand. And I thought in my head, I went, if this guy had have just bought 3 houses worth 600K 6-7 years ago at the end of the GFC and held them, he would have made himself almost $1.5 million more by just keeping it simple. But his business was all around these really intricate strategies, and he'd bought his own secret sauce around, like, I have to keep doing shit.
Yeah.
And he'd fucked it up. And this guy was already in his late 40s. And I'm like, he hadn't figured it out. And after that, I went, okay, shake off all of the noise and figure out what's going to work for me. And then at that point started to change.
Yeah, and try not to put people on pedestals as well, because you never know what their background is, you know.
He was just a dude trying to get rich, man. And he was making his money from selling crap on stage to people that didn't know better, like myself.
Yeah.
You know, so it's like selling early is a big trap. You know, as is selling late if you're thinking about getting out. But you know, another one that was an issue for me, and I think a lot of people in their 20s with, is not having a clear plan. You know, like, why don't you just educate people on your plan so people get how clear a plan can be in your 20s?
Yeah, so I started like learning about property investing at about 23, 24. And, you know, fortunately for me, I had your expertise and experience to leverage off. And we sat down at the very beginning when I started to save my deposit and started to plan out the strategy over the next few years. And basically what I did was just, you know, figured out, okay, well, what's the minimum entry price that I can kind of get into right now for a quality property? And at the time when I was ready to buy in 2018, it was, you know, about $400,000 was going to enable me to buy a quality asset in a quality area. Now, I focused on Brisbane because at the time, Brisbane's properties were affordable and I was getting the most bang for my buck. If I can only service $400,000, I wanted it to be the best $400,000 property in the market.
It actually was the best in Australia. Now that
and yeah, based on the research that we'd done, you know, this opportunity represented the most value. So, you know, I knew metro markets were better than regional markets. So I focused on that where, you know, I could have bought potentially something up here on the Sunshine Coast, but I'm like, the averages over the longer term are going to work out, and this is a long-term asset for me. So I'm going to focus on the third largest capital city in Australia. I bought a house on a big piece of land because I knew houses had outperformed units over the longer term as well. So I'm not trying to beat the odds here. I'm not trying to reinvent the wheel. I'm just focusing on what had worked time and time and time again. So I bought a house, but then with that house, with the $400, my strategy was to buy the worst house on the best street. So get into a really quality street, really close by the beaches, a nice big block of land, but a house that was basically needing to be bulldozed because that was going to be more affordable than something that was low maintenance. And I knew with the industry that I worked in, plus my skill set, plus my friends, that I was going to be able to either renovate or knock down and rebuild this house at some point in the future, which was going to add a hell of a lot of value. So it was kind of focusing on a number of different strategies, which was capital growth as the main focus, having something that would pay me good cash flow in the meantime, somewhere between a 4 to 6% yield, which it's been doing that the whole entire time, and something where there was a bit of a value add opportunity where I wasn't just relying on the market, where I had the ability to take matters into my own hands. So I really just focused on the fundamentals that we had developed from the research that we'd done looking at historic performance of Australian properties. And it started there. So from that, it was really simple. And then basically what I decided to do was rinse and repeat that exact same strategy because it worked so well the first time around. And, you know, 2-3 years down the line now, those properties have now both gone up over $100,000 in value.
It's crazy, man. Like one thing
in a flat market.
In a flat market, I think they've gone up way more than that, to be honest. And I think, you know, knowing what you want to do with them, which is bulldoze them, build a house and probably a second dwelling and then rent them out to one big family, like you're probably going to get $800 a week in rent from both of them minimum. You know, it might cost you 350 grand to build. You've bought it for 350K, but the value of the properties on completion is going to be almost 900K. It's like you're making 200 grand on each of the houses. You're going to be getting $1,600 a week in rent today, 2 grand a week
in the future,
10 years time. Like it's just insane, man, how well you can do if you just want to keep it simple and you've got a plan.
And what we did, like what I'd like to get back to create that plan, we literally sat down, you know, we'd already learned about the property market. I'd read the books like Rich Dad, Poor Dad, The Barefoot Investor, Mastering the Australian Housing Market, a couple of John McGrath books. You know, I'd read a lot of the things. So I knew all of these things. I'd done the learning already. Then we literally sat down like this, cup of tea, piece of paper, let's start figuring out what options are out there. And it was like, okay, well, I want to get in the market as soon as possible, with value, because I could have got in earlier and bought a place worth $250,000 in bumfuck nowhere in central Queensland. But that wouldn't have done anything for me. But I've decided to wait until I could service a loan amount that was going to get me a quality asset. But we literally just sat down and, wrote this down. It's like, where are you at right now financially? Where do you want to be in the future? What has held you back, or what is holding you back? And what are your property investment goals? And we answered all of those questions. And then from there, started to develop this strategy. So, that's fortunate for me that I had you right there, but fortunate for you guys, you've got us right here. We offer free strategy sessions to people that are thinking or that are ready to get into the market, and we help you answer all of those questions and start to connect some of the dots.
Exactly. Like, there's two things, man, that I just look at that, your temperament would be like a really good profile for the average 20-year-old listening to this. Like, one thing that you did, which is super impressive, man, is you could have, I remember having that convo. You're like, I can afford 300K now. I want to own a property. And I'm like, just wait. And you were like, and you were patient enough to wait. Like, most people aren't. They think owning is, because there's ego, there's identity, there's also like urgency,
social status.
And it's like, it feels good to tell people like that you own a property in your 20s, or you own 2, or you own 6, or whatever. Like, there's street cred associated with anything you do early. There's respect. And then it's like, as you get older, it's like, oh, you didn't do stuff. Like, it's like the flip side of it. And so, like, that's really impressive, man, because most people can't wait. But waiting, saving for that extra 6 months like you did, has now made you an extra couple of $100K when you complete your strategy than you would have. The second thing that I think is absolutely impressive that you did, man, that I didn't do in my 20s was, I wanted my properties to look a certain way because I had like identity attached to them in my 20s. But because you've like let go and done so much work of the ego, like, you were happy to just go, I'm going to do a 2 to 5 day cleanup. I'm going to put the absolute minimum in, knowing that I'm going to most likely knock them down. And then I'm just going to be patient. And over the last 2 to 3, 4 years, you've just sat on them, you've watched them, you're like, I could renovate them. I remember having that convo, and I'm like, I really feel like, knocking down would be a better long-term choice. And it's like, by not investing that money, by not getting caught up on putting the lipstick in and spending that 30K, you've again just made yourself so much more better cash flow long-term, plus way better capital growth medium-term. And it's hard to be patient in your 20s, but if you can, and you can follow the plan, like, Simon is the most coachable person that I've ever worked with in my life in terms of, here's setting a plan. Simon's daily discipline to like save the money, to work the process, and to do what he said he was going to do is like nobody I've ever seen. And like, people can fucking learn from that, or you can be an idiot like me in your 20s and try and figure it all out the hard way
by yourself.
But it's like, what's the point? Like, I've bought 14 properties, soon to be 15, 16 this year. Simon's bought 4. We've talked to over 5,000 people that own between 1 and 15 properties. It's like, some of this content that we've put out is like just high level conversational, but some of it is so specific. It is like pulling out the fucking sword from the stone. It's like exactly what is going to make you so wealthy and free in the future. Like, just don't take it and run with it.
Don't overcomplicate it. Like,
so easy, man.
Don't think that it's harder than it actually is. Like, the only thing that makes it hard is the way we talk about it in society. Like the way that, banks talk about loans and mortgages, and the way financial advisors talk, the way accountants talk. Like, it sounds scary, it sounds complicated, but it's just
a new language.
It's just made up words to make them look better than they actually are.
Honestly.
But like, it's seriously just as simple as this. And like, that's what I want you to recognize. Like, yes, I did the work, I did the activity to do what needed to be done, but everybody can do that. Like, it's actually easier to do what I did than to do what the normal person does, which is overcomplicate shit, make it too difficult, and become overwhelmed by the whole process and just, flip the table and walk out. It's like, just stick to the activity, figure out the activity, and then stick to it.
The thing I love about almost everyone listening to this is like, I know that you guys either come from a sporting background or a training background, or you do something. And everybody knows in their 20s that like by consistently doing the reps, you're going to get the outcome. So just treat this like you treat gym. Like I loved training when I was younger, and I still love it now. And every time I was like training for a long run or like doing a ride or at the gym, I was like, those reps are painful, but they get the result. And it's like, this is the same thing with this. It's like, it's uncomfortable, it's scary. The last mistake that I wanted to touch on, which I think is super important, and you just mentioned it, is it's not common for people to be financially free in Australia and talk about it.
No.
It's very, in fact, the opposite of that. So here's two examples of this. Like, I had a really good mate of mine who's a barrister from Sydney staying at my house over the weekend.
Yep.
And he said he was just in Palm Springs in America just before COVID. He hired this insane old school 1960s car and drove from LA to Palm Springs, top down, had an absolute ball. And every person on the highway that he drove past was like, hell yeah, your car's sick, man. I love it. Everywhere he pulled into, people are stopping,
Having a look.
talking to him, having a look, going, how'd you do this, man? Then I was talking to one of my brother-in-laws, Brad, who runs a good building company on the coast as well. And he was down the Gold Coast with one of his friends who's got like a 500k Audi the other day. They were driving around, people like yelling shit at him like he's a tool. This guy's just made money from his business and he's worked his ass off. And then the guy couldn't even park it because he said, if I park this on the Gold Coast, it's going to get stolen tonight or it's going to get keyed.
Fucking hell.
And I'm like,
I hate Aussies like that, hey.
this is Australia. Like, it's like we have this, if someone's doing better than us, like when I started to do better than some of my friends, I like legitimately lost a handful of friends because they just couldn't understand someone doing better. Like they wanted so much to stay in line with their average around them that when I started to exceed that, they were like internalizing it like a person not drinking when you're younger and you're drinking. It's like, come on, man, have a drink because you want them to. It's like, what I'm getting to with all of that is like, there's a whole lot of listening in our 20s to people because it's like everyone's got an opinion and we feel like we should, but it's like, listen to a handful of people that actually know what they're doing, that are like 20, 10, 30, 40 years older than you, that have runs on the board, that don't just talk shit. And don't listen to people that did stuff 20 years ago that haven't done anything since and just coach people on what they did in a different time. Like, find people that are doing shit. But most importantly, start listening and finding that inner voice.
Yeah, exactly.
And going, what do I really want? Who do I want to be? You don't want to be that muppet sitting next to you at your work that's working at 50, or that dude on site sitting next to you that's
talking absolute
60
smack,
that just knows everything, that never did anything. Like, listen to you, find out what you want. What choices do you really want? Like, I was talking to someone the other day and they said they wanted to be worth 10 million bucks, and I'm like, why? Like, test it. Like, I was reading another book that like the other day called The Surrender Experiment, and the guys, I was listening to Alan Watts actually when I was writing the other night, and he's like, you want to be enlightened? He's like, do you really? Like, you want to be like a Buddha? You want to sit there all day in enlightenment? Like, there's no enlightenment to the Buddha. He's just sitting. He's not like sitting there trying to be enlightened. He's just sitting enlightened. It's like, there's no, like, you know what I'm trying to get to?
Yeah. It's just like, once again, not putting people on a pedestal and just like following your own little path, following your own journey.
Do you want to be enlightened? Do you want to spend the next 30 years like meditating and trying to get there?
I don't.
To just sit? Or like, do you want to like find your own voice? Do you want to be worth 10 million bucks? Like, I thought I wanted to be worth so much money when I was young. Now I just want 150, 200 grand a year of income so that I can choose to work. I could not care how much I'm worth. I just want a choice. Figure out what you really want versus like the hype and go for it.
There's going to be a lot of people trying to pull you down, like especially if you are getting started early and you're not surrounded by a really uplifting, motivating group of friends or family. So
can I say something to interrupt you? How stoked was everyone for you on your first and second property?
Amazing.
Versus like, does anyone even want to know now that you've got 4? Like who wants to talk to you?
I honestly didn't even tell people when I bought my 4th. Like I didn't even tell people, like my friends. I didn't tell like my dad for a few days as
Not
well.
because you're holding it. It's just like,
It's
why you know?
Well, it's just like I know the thought process of most of those people is like, oh, fuck you. Like, it's kind of like the Harvey Specter thing. Like, I've been watching Suits again recently.
How good Suits, man.
And like all of these people throughout the show are like, oh, Harvey's had it so easy. Like, he's just had everything given to him. It's like, no, he didn't. He worked his ass off to get to where he is. And just because he's smarter than everybody, it doesn't mean that he's, you know, like he's had everything handed to him on a silver platter. And I look at it the same way. It's like, they're all decisions. They're all choices that we all get to make. It's like you can make the right ones and the good ones that are moving forward, or you can make the wrong ones that are pushing you backwards. So just not like getting attached to the way that other people, you know, look at you is really important. But hopefully we can start to talk about this stuff to change the narrative, to get rid of that stigma, to get rid of that tall poppy syndrome and start being uplifting. So
we just want to see you guys smash it.
Yeah.
Like when you get to the end of your 20s, I want every person that's just in their early 20s now to be in at least Simon's position by the end of their 20s. Now, Simon busted his ass, worked hard. Like, I put you through fucking hell, man, for 3 years because, like, diamonds are cut under pressure. Like, if you've got potential, go find someone who's going to bring it out with you. It's horrible.
You look at
in the pressure cooker, but when you come out, it's like you're a fucking diamond.
You look at like some of the world's best coaches, you know, like a Bill Belichick in the NFL, or like a Sir, what's the Manchester United old coach?
Yeah, God, I can't believe I forget, but
me too.
Yeah,
Sorry about that to all the soccer fans. Please comment it down below
my
so we
past
can
self
trigger
is
it.
just like you can't even remember your like favorite coach of all time.
These guys like are cutthroat mofos. You know, they are brutal guys because all they're trying to do is get the very best out of their players. And sometimes that's the way that it's got to be when you're cutting your teeth. It's like,
well, you can do it the slow way. You can cut your teeth over 15 years, or you can do it in 2. I've like always found people that help me cut it in 2.
Yeah.
So I want a unique life for all you guys. We want the best for you. We want you to be financially free. We want you to have choices. We want you, when you start having kids, or if you've got them, to be an inspiration, not through talking, through showing them and actions. And I want your sister or your brother to come to you and go, hey man, like,
how'd you do that?
You know, everything at the moment is just an idea until you show them, but how? Like, you know, I want you to be able to talk to colleagues at work with certainty and go, man, like, this is working for me. I plan on being out of here in 10 years. Like, you know, I want you to have a life that is your own so that you can inspire the world and do the right things for yourself, or just inspire the world through not doing anything and just living your own way.
Yeah, you got time is 100% on your side. Like, you've got more than anybody if you're in your 20s and getting started. So, you know, be stoked, be proud of yourself, and just keep doing the activity, because sooner or later the activity will turn into some pretty amazing results.
You know, I've said this to you before, man. Like, I love working with our clients at my age group in our 30s and our 40s. Like,
hell yeah.
You know,
there isn't a bad person 70, that we work with.
Over 70%
Irene at the
of those
moment,
people.
Working with a lady in her 60s who's just the most positive, amazing, kind-spirited, lovely person I've ever worked with.
Like, I love the beautiful people that we're so lucky enough to work with, but I love working with 20s because it's like everything is upside, and if I could have bumped into myself, like, I would probably be worth over 10 mil now. Like, I'm not joking. If I had have just made 4 or 5 really good decisions in my 20s, like, that's how crazy it can go very quickly. It's insane. So yeah, I'm excited and grateful, and I just wish you guys all the best. Share this with your mates, share this with your partners, share this with the girls or the guys that you're hanging out with. Like,
your
get
kids,
them stoked as well.
Your nieces, your nephews, whoever.
Yeah. But we're super grateful for another episode. If you're not already doing it, definitely follow us on Instagram. It's much more specific stuff than this. And what we're trying to do there is you to be able to jump on our story every day, get your full property education over a year by spending 30 seconds a day watching our shit.
Yeah.
Like, we're trying to make it that simple so that over a whole year, you'll absolutely have it over everyone else. Same with our YouTube channel, like shorter format, easier to digest stuff, inspiring stuff, case study stuff,
strategy stuff.
get over there and subscribe to that. And if you haven't already, like, I feel like this is a 5-star rep. Give us a 5-star review. We wish you all the best. And I just can't wait for you guys. Like, I'm 35 now. I'm like more excited than I've ever been for what we're doing and where we're going.
Hell yeah.
And like, I feel like I'm just reinventing myself and my strategy too, which is just all the way back to where it started. Keep it simple, do the things that work, and just have fun doing it. Stay in your lane, keep your head down, and just make it work.
For sure.
Cool.
Thanks so much, guys. Have an awesome day, night, wherever you are, and get out there and do what needs to be done.
That's it.
Yeah. Oh, sweaty. So sweaty.